Welcome back. On this tax day, you may be thinking quite a bit about your finances. Well, what about credit? How can you get credit, improve your credit score? What can you do if that credit score is lower than you'd like? How can you build it? Well, I had a great conversation recently all about this. Let's take a look.
Why does your credit score matter? Well, today we have a financial expert here to discuss why having credit is so important and also to provide tips on how you can improve your credit score. Nidhi Verma is VP of International Research and Consulting at TransUnion. She's going to help us know how we can approach these important subjects. Nidhi, thanks for joining us. How are you?
I'm great. Thank you for having me here.
So tell me more about why having credit is so important.
Well, credit scores and having a good credit score is really what our study underscores the importance of. So TransUnion conducted a study across developed as well as developing credit economies to understand how many consumers are truly unserved or underserved from a credit perspective. And what we found is that there are 45 million Americans who are either credit unserved or credit underserved. About 8.1 million of these consumers are credit invisible or unserved. What I mean by that is they've never ever held any type of traditional credit product in their wallet. And about 37 million of Americans are credit underserved, meaning could be a consumer who has one credit card in their wallet, they have a credit history, have had it for more than 2 years, but they've never opened any other type of product, mortgage, auto loan, personal loan, or any type of installment loan, or any other line of credit. They've never held any other type of traditional products in their wallet. And why it matters is because these are credit disadvantaged consumers who could certainly benefit from having better access to credit. Consumers do need access to credit for economic advancement as well as upward mobility that could potentially help with financial management and their daily lives.
Define exactly what a credit score is and how it's determined.
Well, credit score is essentially a snapshot or a view of your risk as a consumer. When I say risk, I mean by risk as assessed by lenders. Lenders are looking at your information on the credit file to make sure they're taking the risk on the right type of consumer, if you fit their risk profile or not. They're looking at your payment obligations that you've made over the years. How many products do you have access to? All of that goes into determining what your score is, but what's more important is not only that you are visible, meaning you have a score, but also that you're managing and maintaining and potentially improving that score over time in your credit journey. And how do you do that as a consumer really is about really first getting you included in the credit environment, included in the financial ecosystem, by making sure those offers are available to you to expand credit access.
What is the best way to get started with credit?
Well, a lot of the younger consumers get into the credit market as they get their first job, they get their first bills. And when I say bills, I don't just mean your credit payment obligations. You know, in today's environment, when lenders are making decisions on extending credit to you, they're also looking at how you've made payments on your rental obligations, your rental payments, your mobile phone payments, any kind of telecommunication payments that you're making. And once you open your first credit product, you know, make sure you're making your payments on time. Not only are you making your payments on time, you also want to make sure you're not extending your credit access or credit utilization rather beyond your financial capacity. Overextending of your credit lines, overutilizing them beyond 30% can potentially impact your credit score. And so consumers who are looking to improve your scores, you know, one of the tips would be making sure utilizing your lines of credits, especially on your credit cards, and not building higher balances beyond your capacity to pay would be a good first step to start.
And also, what can we do to improve our credit score?
Well, things that I mentioned just in terms of utilization, and I'll highlight that, you know, in our study, what we found is that consumers do migrate from being underserved to being credit served. So what we're observing is that consumers are improving their access to credit, and they're improving that access to credit by potentially improving their scores. 1 in 4 Americans who are underserved do, over a period of a year, go from being migrated into that credit-served population. They are opening, 90% of these 1 in 4 Americans are opening additional credit products, whether it's private label cards, whether it's credit cards, auto loans, and so on and so forth. And we also ask consumers, why do you think you're unserved or underserved? We want to understand if there is a demand problem or is there a supply problem. And what we heard loud and clear from consumers is that half of these underserved consumers who are looking to get better credit are looking to apply for new credit products, but potentially with lower cost of credit. Majority of the consumers responded saying they're looking for lower cost of credit. So as lenders incorporate those alternative data sets that I talked about, rental payments, telecommunication payments, into their underwriting criteria, as these underserved consumers migrate from being underserved to credit served, make their payments online, and again, making sure you're not overextending beyond your capacity to make those payments on time, not overutilizing those lines of credit beyond 30%, you can improve your score over time.
And where can we get more information?
Well, to learn more about our study across the globe on credit inclusion, I'd encourage you to go to www.transunion.com/financial-inclusion.
Well, thank you so much, Nidhi, for joining us today. Really appreciate this information about our credit, why it matters, how to improve it, and much more. Thanks for your time.
Thank you for having me here.